Hello, Warriors. Welcome to the February break. It's the title of this video, and it's something that you have to be an old timer to remember. It's a commodity phenomena that has happened many times. You could go back to my videos on Real Vision and hear from last year, and you'll see that the call for the February break, everything went south. And so now, instead of the market peaking in February, we have a lot of important situations and potential intermediate term type positions setting up. So let's start with the dollar. I've been looking for 105 for a long time. Looks like we're trying to break out of this range finally. I've been telling people be patient for euro till at least the 107 level. Looks like we're on our way. It's trying to hold here. Uh, Unless there's a huge reversal surprise, it looks like the dollar's on its way to targets. Thought that cable might give us a short squeeze. It tried. I thought they might even go for the stops here. Cable's still, holding in this formation. What's important is see how we held here. We take out 26 this time. It measures, this is a little over 250. So that's going to give you, 23 and a half or so back down towards 24 on cable. I'd sell rips there now. What's holding up the best is Aussie, and I've been telling people to be patient on a buy in Aussie. We have two drives here, right? And then if you just take the arithmetic range we had from this low, 508 to, what was the high here today? 610, call it 100, and we take this low out by 100, it gives you the longer term target in Aussie that I've been talking about for months, and that comes in right around 64 for a potential right shoulder of a Head and Shoulders top. Canada really was stiff as well, putting in a reversal week to the upside. We were only able to get back to, I believe, 50% here. Yeah, 33.70, I believe it was. I thought we might go 33.61.8, but that doesn't look likely now. So this is a nice little bull flag. We could have a nice move. We could have 300 from here, take us up maybe all the way up towards 137 in the weeks ahead into February. Um, Mexico is something I said looked to be a buyer around 17 or so. We got very close, 1710, close enough for government work. If we start taking out 1740, that's on the way. Gold, I've been saying be patient. Everyone was getting a little crazy last week. We're going to break out. We're going to break out. We're on the verge of war with Iran. Yields are collapsing. And today's number completely dashed all of that. So, it's been my belief that at least we have to shake out the 2000 bulls. A friend of mine said DSI was 78 in gold. Too many gold bulls right now. And it's going to take both price and time, maybe a month. I'm going to go with David Brady's target, which is 61.8 back. It's 1938. So, it's all the way down here. Could we stretch to my line at 78.6? Sure, everything can happen in the markets. Also, I pointed out and sent it out yesterday that the gold silver ratio had a breakout, had a test, and with here, what we're seeing here, this means at least another high over 92. So silver on its way. I've been talking about the 21 handle for a while. We just got a little bit under the 21 handle, but to me, it looks like we're, going to 21 and a half. The most extreme case I have for silver is maybe 19 into March. So another call that was really, kept people out of trouble. The miners haven't opened yet. I expect some downside action. As far as stocks are concerned, this I think is a problem long term, not necessarily right away. Okay, these are the regional banks. And just think about how much equity strength there was from May to right now. We're making new all-time highs in S&Ps with glaring divergences. This was before, if you look left, 52 was big. So all we had was an ABC correction unless we get back over 52. And it looks like it has to hold, 44. But this is a problem. And spoke to someone this week and did an interview with MT Melanin. And he was showing the emergency facility that the Fed put in place back here for SVB. And, people were asking, well, if the emergency is over, why does the Fed still have this emergency facility open? And then Thomas showed a chart that showed the borrowing from it had kind of moved sideways during this period. But over the last couple of weeks, um, borrowing has increased. It showed, the trend heading up again. So there still are problems with banks, and there's going to be, uh, the market thinks it's no big deal. It's contained. We'll see about that because if this is going to new lows, eventually this is going to be a problem because maybe, I mean, the economy is so strong, the only thing that could cause problems isn't the economy. It could be the financial system. So, the market runs on the financial system. So that's something that I think long term is, pretty important. I would love to see it break back up over 52. That would give us all clear for a while, that the regionals were going to be okay. I did want to cover a few other things. I want to talk about TLT. First, I'll show you the reaction that we had in the 10-year. So, we got almost all the way back down to this low, and I thought that, we were going to head up towards 440. Well, now we can. And so yield should head up, pretty nice little reversal, and we get through 420. Why not 440? So this was 40 bips, and maybe this is C 1.618 would be 64 bips from about 380. Gives you 440, which is halfway back. TLT is not open yet, but I talked about this that we could have a pop in bonds based upon that this is a corrective pattern, that we could have A, B, and then C to take out these lows, and then that would be the buying opportunity in bonds. So to me, it looks like higher yields that the verdict is in, and people are going to now start questioning um, when will the Fed ease? Now, do you think Powell knew what the numbers were going to be when he took March off the table? I'll leave that up to you. Just a quick update in nat gas. It's scraping the bottom. It's trying, but there's an old Wall Street expression, never sell a sleeping market, and this market is comatose. So still expecting the bottom there. Hope that I've given you an edge. Looks like we're going to have an ample breakdown. It's trading right at 180 at this breakdown. That's not a good sign for the market. And even though we made new highs in the S&Ps yesterday, um, look at this divergence. And we haven't made a new high in NASDAQ, right? Still a lower high. And we made new all-time highs again, and the VIX is still holding. Over 15, 14 in the VIX is a danger sign and could break out as the dollar heads up to 105. The February break takes metals down to our entry, takes foreign currencies that we want to buy against the dollar down to our entry, and sets up a very good buying opportunity in bonds with yields much higher. So don't just count your pips, count your blessings, and I'll see you in the room. There's really a lot of good content. I put out a couple winning trades. I was actually short the dollar before uh, the Fed, made some pips and sold it again, made some pips. went to at 103.45, got stopped out BE. I'm not long the dollar here. Um, I'm just going to wait now for the buying opportunities to develop. And I think it might be a little less than 107 in the euro. It could be 106. So uh, looking to scale in down here. And of course, Aussie, because I think the metals will be bottoming by there then. So big buying opportunities, big selling opportunities, maybe the last one for a while, selling opportunities in the dollar, and finally buying opportunities in metals. I know it feels like they haven't gone anywhere, but it's been more like the miners haven't gone anywhere. Metals have done fine. Gold's held up, since October of 23. That's pretty good performance. So this is the break I've been talking about. It's really taken patience. Sometimes when you're looking for a narrative, just waiting for it can be stressful. And then you have times where you begin to now doubt your technical narrative. Um, but patience always pays. And I think it's going to pay us again for not being long this stuff. We'll be buying from people that are going to have GMO orders. Get me out. And the DSI won't be 77. It'll be under 50. Have a great weekend, everyone. See you in the room, tradegatehub.com. Uh, Enjoy sharing this. Hope you're learning. See you next week.